Good afternoon. This is Tom Alexander. It is Saturday, June 3rd. It is 5:18 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the video addendum to the weekly report that I send out every week, the written report. If you're not receiving that report and you would like to receive the report, please send an email to tom@alexandertrading.com. I will put you on the list. It's free and you'll get the report every week. Also, if you're watching me on YouTube and you're not a subscriber, please subscribe to the channel. If you find value, please like it, send it to your friends. Thank you. Okay, we finally have some movement. This has been 2 months of some of the more confusing trade that I can recall, and I've been trading a long time. So let's just discuss, let's just go through each of the indices we have. We'll look at the indices, we'll look at market structure, we'll talk about the internals, and we'll talk about what we think is going to happen immediately ahead in the coming weeks. So let's take a look at the charts here. Okay, let's start with the NDX. The NDX is up 35% from the beginning of the year, and it's been pretty vertical really since, the end of April. The next level in the NDX, there's nothing from an auction market perspective that could be potential quote unquote resistance for another 4%. Now, that doesn't necessarily mean we trade directly into this upper level. It could stop anywhere in here in balance. Just from an auction market perspective, this is the next level to keep an eye on. This is the next inflection point. The SPX, is really at the lower cusp of the level that includes this August high. We're less than 1% from that August high at this point. And then above there, you're about at least 5% until you get to the next level. Now let's look at the Dow. And the Dow is still comfortably below intermediate term upside levels. And in all of the indices, I will mention this, in all of the indices now, the level that's important to the downside, the critical level, is Friday's cash lows. Let's take a look at the Russell. And the Russell is the one that, to me, is the biggest tell. And you can go back and you can look on the website, you can look at previous weekly reports, and I would encourage you actually to look at last weekend's report in particular, because it discusses in detail what had to happen under a bullish scenario. And every single box was checked on Friday. We had a big gap up in the Russell. The Russell was up, I think, from close like 4%. It had just the biggest update it's had in a long time, certainly this year. Now, the Russell is also in an elevator shaft, and there is no quote unquote potential resistance from an auction market perspective for about another between 2.75% and 3% up into this area of 1875 to 1887. And again, the drop dead level to me, if these four indices were to, for some who knows why reason, close below Friday's cash session lows, it would be very bearish. Now you can see on my screen here, and I have highlighted on the charts in the written report, the levels that really should hold intraday. You really should not see Friday's range deeply retraced in any of the indices if the occurrence on Friday is a significant breakout into much higher prices for a longer period of time. Let's take a look at the internals. This was very interesting. Friday also had the largest expansion in breadth since May 5th. May 5th, and I'm going to show the shorter term view of the price breadth relationship on May 5th. But this was the May 5th, and this is only with the benefit of hindsight, was the kickoff move now. And going forward now, if we were to see breadth I don't think you will see breadth exceed the 1997 level that we reached on Friday prior to some sort of could be fairly significant gain and then some sort of subsequent pullback and a reset in this whole price breadth relationship. Those of you that have been following my work know what I'm talking about. I lean very heavily on the price breadth relationship. It can be a very useful tool at times. So let's look at the 30-minute breadth. Now, there's a lot of information on this chart. This is the March 14th high, and this really represented a kickoff. I think I said May 5th before. This was the kickoff to this entire move here. From here to here so far, this was the momentum peak. We have not had a greater reading in breadth intraday or at the close than we had here. This was the greatest reading that we've seen since May 5th. So it's still very healthy. Now, you can see here, this is where it got tricky. The idea, the try to attempt to keep it simple, and then this got complicated. When you have a momentum spike in breadth, what you're expecting then is you're expecting to see higher highs and higher lows, and you should see higher highs and higher lows if indeed that was a kickoff to something of larger degree. That certainly occurred. And you can see breadth behaved that way. Breadth never, it was persistently positive. It traded persistently into upper extremes. The retracements were relatively shallow, or the contractions were relatively shallow in breadth, and that was accompanied by relatively shallow retracements. Now, it got tricky here because this pivot low was broken one day, and then the next day we screamed higher, and then we broke out to the upside. This was a false breakdown. This was a false breakout. This was a test, and then we went back into this multi-week range that was just mind-numbing. Then we rallied again. We came down and tested this pivot low, and look where breadth was, and now we're off to the races again. So if this is going to be a significant move higher, we're going to go higher another 4 or 5% before we have a 4 or 5% retracement. What you should see now, first of all, you really shouldn't, ideally, we will not see a lot of retracement into Friday's range. So something like this. But on a bigger picture basis, what you're looking for, let's just take a hypothetical here. You want to see the market make a series of higher highs and higher lows in price like this. This is typical. And then what you'll have breadth contract, and you'll have breadth go up, and it won't take out the previous high. It'll do one of these numbers, this type of thing. And then at some point, what will happen is the internals will get so weak within the rally that you'll get some sort of bigger retracement at that point in time. So I think this is the most, this is the most likely position we are in this particular phase, this particular leg to the upside. I think we should see immediately higher prices next week. Now, clearly the rate of change is not going to be what it was on Friday. Another thing we're likely to see now the broader indices, and in particular the Russell, start to carry some of the load, and perhaps the NDX to underperform. Now, I would expect the NDX to go higher, but certainly not at the torrid rate of change that it has gone higher for the past couple of months and since the first of the year. And I don't think the relative outperformance of the NDX versus the other indices is going to continue. As a matter of fact, I think it's going to be the inverse of that. I think what we're going to see now are the other indices, and in particular, maybe the Dow and the Russell outperform the NDX. If indeed this is a breakout to a broader, longer move that has a week or weeks to go before we get any sort of relatively meaningful retracement. And as usual, price action will guide us along the way. We know what should happen, we know what shouldn't happen, and that's what we'll be looking at every day. Hope you guys found value in this. Have a great weekend. I'll talk to you next week.